it's Susanna, and I just wanted to share with you, in case you weren't aware, the ATO has changed the rules. Well, they haven't changed the rules. The government has changed the rules around when the ATO, which is the Australian Taxation Office, can release your superannuation. So typically, superannuation, you cannot access it until you meet a condition of release, which typically has to do with reaching a certain age and or retiring permanently from the workforce. But I wanted to point out that you can now access your super on compassionate grounds, and one of those grounds being in order to make a payment on a loan or council rates so you don't lose your home. And this is, I think, quite big news, because what this means is that if you are falling behind on your mortgage and you're not able to pay it, I'm just scrolling down to show you the details. Here we go. Preventing foreclosure or forced sale of home. So what this means is, if you are unable to pay your home mortgage or other expenses related to your home, you are now able to apply to the ATO to have your superannuation, part of your superannuation, released under these compassionate grounds to prevent foreclosure or forced sale of your home. So you may be eligible for compassionate release of superannuation to pay for mortgage arrears if your mortgage lender is threatening to repossess or sell your home. To be eligible, both of the following must apply. It's your principal place of residence, so they're not going to let you access your super to save your investment property, and you're legally responsible for the mortgage payments that are listed on the written statement. So you can't apply for release of superannuation for a dependent's mortgage. So all those parents who have co-signed with their first home buyer sons and daughters to let them enter into the property market, they can't. If their sons or daughters get into trouble, they can't access their superannuation to help their kids out. So the maximum release amount is, and this is within a 12-month period, so after 12 months you can apply again, is 3 months of repayments and 12 months interest. So for example, if your monthly repayments are $1,200 and 12 months interest is $9,600, the maximum you can request is the $1,200 times 3 plus $9,600. Okay? This is huge, I think. I think that this is really represents a sign of the times with what has happened in the Australian property market, that it's become so overvalued that now we know, if we follow Martin North and his channel Digital Finance Analytics, we know that over 1 million people are in mortgage stress. So this is an opportunity for them to access their superannuation and release themselves from that stress. But it also means they're going to have less money to retire on. Like, there is an impact. Super isn't free money. That's retirement savings. So this is big news. I actually work in the financial planning industry, and I only just came across this today when I was looking at a product, and I happened to come across a product update because, of course, when the laws change, the products have to be updated accordingly. So, wow, this is news. This is big news. I don't know how I managed to miss this with everything that's going on in property and everything that I'm aware of in super, but hello, here it is. I wanted to make a video and just share that and let you all know that this is possible. And also, what do you think of it? I'd love to hear your thoughts on the new rules that allow people to access their superannuation on compassionate grounds. So until next time, keep popping.